Saving in fixed or recurring deposits does not give inflation-beating returns. To earn returns post-tax, that is significantly higher than inflation, requires investing in equity. You are about to see a simple-to-use but effective way of investing in equities that ensures higher returns but with lower risk. To the layman, the stock market seems to move in a random direction. It appears so when seen over short periods of time, for example, movement within a day. However, when seen over a longer time period, it moves like a pendulum, swinging on either side of a mean level. The market pendulum does not stay very long in this mean position, but is always swinging towards. No one knows how far or how long the market will remain on one side and when it will reverse its direction. But what is certain is that the market will keep swinging between the two extremes. So, how do we use this to take better investment decisions? When we understand how the market moves, it is obvious that the time to buy equity is when the market pendulum is moving to the left, and when it moves beyond the mean to the right, we should be selling or moving out of equity. But how do you know the market's mean position and how much should you invest in equity at different market levels? This important decision is called asset allocation. We are glad to tell you that we have found a way. We have created a unique indicator, Nifty at MRP, which informs us what is the market pendulum's mean level. And how do we get this? At MoneyWorks4Me, we have honed the method of finding what we think is the full and fair value of some 200 stocks. We call this its maximum retail price or MRP. We recommend investing in only good companies and that too at a discount from its MRP. We now bring you simple-to-use solutions based on this that enables you to allocate the right percentage of your savings to equity depending on where the market pendulum is. The rest is parked in a liquid fund, an extremely low-risk investment that can typically earn 5% returns after tax. But in equity, what do you invest in? You can choose to invest in equity through index fund, mutual fund or direct equity. This depends on the size of your investment and whether you have invested in equity in the past. We recommend that if you are new to equity investing, start with MoneyWorks4Me Plan Alpha. An index fund is the simplest and lowest cost way of investing in equity. Even with a very small investment, you own a portfolio of 50 to 80 very good companies, thus reducing risk dramatically. Index fund is highly popular and preferred over mutual funds in the developed markets. We see this happening in India too. Using MoneyWorks4Me Plan Alpha is like fitting two main engines to your investment rocket: index fund and asset allocation. We have tested Plan Alpha over the last 5 years and the results are amazing. 11.3% compounded returns with reduced risk, since it held 30+% on an average in a liquid fund. MoneyWorks4Me Plan Alpha enables you to earn significantly higher returns than possible with saving instruments like fixed deposits with reduced risk compared to pure equities, making it a must-do for new investors. Where do you go from here? And what do you do if you're already investing in equity? As you learn and grow more comfortable about investing in equity, you can add select mutual funds and invest in direct equity. With MoneyWorks4Me Plan Omega, you can add investment-worthy stocks to your portfolio when they are available at attractive discounts. We have been helping retail investors to do this successfully for more than 7 years now. With Plan Omega, you are fitting additional booster engines to earn higher returns. And yes, if you liked what Plan Alpha does to your investment, have a look at the difference Plan Omega can make. Now, if you have liked this and are wondering whether you will be able to manage this, relax. You will be amazed how simple we have made it for you. and we will help you all along. Don't delay your decision to start investing and making your money work for you. Call our advisors or book a demo now. Make your money work for you and not for your bank.